Okay, great. So tonight's focus, guys, is going to be on why isn't my trade moving? I don't know about you, but I've had issues with that to where I see the perfect setup. I mean, everything. I mean, the trend surfer is all red. The smiley face little trend line is red. I mean, I'm just chomping at the bit, salivating, man, and the drop looks very clean. If anybody's ever seen that, and then the pair did not move, can you put a 5 in the chat for me? If you've ever experienced that, where you see just, I mean, the drop of all drops coming, and you put your, good lot size, and you're just ready to move. Okay. And then what ends up happening is you wait, you wait, you wait. Do I had a bunch of 5s? Yeah. Um, you wait and you wait and you wait, and then you just like, man, forget, I'm getting out. As soon as you get out, it's like people were waiting on you. Hey, they're gone now. Let's go. And sometimes I felt like, man, are they watching me? I took this thing personal. Like, are they really watching me? Right. And so there are several reasons, and this is not an exhaustive list, but I think it's a fairly well-rounded list of reasons why your trade is not moving. Okay. So the first one is, you can see right here, is timing. Okay. I got my little annotator here. I'm gonna timing. Okay. We talked about before that you may see a beautiful setup. Let's say it's UCAD, which moved great today, right? Well, United States, Canada, North America, Eastern Standard Time, Central Standard Time, Mountain Time, whatever. It is not wise to expect UCAD to make big movements tonight. What time is it? It's 8 o'clock Eastern, right? All the banks in the United States are closed. All the banks in Canada are closed. Banks moved the forex market, not the retail traders. So if both of those banks are closed and both of those countries are in the same kind of time zone range, it's not wise to expect them to move. Okay. Likewise, something like NZDJPY, that would likely move at night, because New Zealand, in that part of the world, it's morning, as well as in Asia. Okay. Sometimes we have to look around and just investigate things. A lot of times, we being people in America, we can kind of be self-absorbed. So we think that the world is on our holiday schedule. They celebrate everything we celebrate, but other countries celebrate other kind of national holidays, whether it's a war memorial or it's honoring, something. There are a lot of things that are universal, like Christmas, Easter, Passover, but there are some special dates in certain countries, Independence Day or what have you. And so Forex forces you to be a student of the world, what's going on in the world, current events, holidays, meetings between countries. Um, you're more interested politically what is going on geopolitically, and so you have to be look and find a calendar of holidays for Japan, calendar of holidays for New Zealand, Australia, and just get those, put those in your binder, in your book, so you can look through. So you're like, hey, I see this week that national holidays coming up in Japan. So should I expect the Japanese pairs to move much? We don't know, but that's something that you need to find out and realize. Okay. So the second thing is news and events. Okay. There are several sources that you guys can use. The two main ones, as it pertains to um, the currency markets, is Forex Factory. Okay. If somebody could drop a link to that, that would be great. Forex Factory, for those that may not know it. Also my FX book. My F is in Frank, X as in X-ray. My FX book. Okay. Both of them have an app that you can use, and you may have to register for an account or something like that. But in doing so, you can find out what's going on a particular day. Like for instance, tomorrow is a very light news day. If y'all see this on Tuesday, August the 24th, there are no red folders. We need to be looking for red folders. Red folders indicate high impact news. Tomorrow, there's nothing major at all. And so it should be a pretty clean trading day without having to wait for any news. Okay. So there's two ways that news can affect price. Next week is going to be NFP. Okay. That means, anybody doesn't know what NFP is, that is non-farm payroll. That is the number of jobs added, the number of net jobs added over the last month. That always comes out the first Friday of every month. Okay. NFP week usually is a slow week because banks are holding their money until they know exactly which way to trade. Okay. And if the banks are holding their money, we need to hold our money. Okay. Y'all write this down. Do what the banks do. Do what the banks do. If the banks are in the market, you should be in the market because there is uh, a more effective current flow of money. Okay. If the banks are sitting on the sidelines, you should sit on the sidelines. One of my practices that I started a little bit last year, but I'm definitely going to do that this year. I don't trade. I will no longer trade in December. Okay. Can somebody type in the chat why we don't trade in December? It's not deep. It's really simple. Somebody tell me. Why don't we trade in December? End of year, end of year. Yep. And mainly holiday spirit. That's it. Christmas. Just this general, again, who moves the markets? Banks and institutions move the markets. Guess what they're doing? They're busy getting their bonuses for the end of the year. They're busy having holiday parties. They're busy, having excursions. They trade pretty much and guess what? January, there's a hangover from that. Okay. Yes, people on vacation as well. January, the first part of January, people are still on vacation. People are still, uh, just trying to sort out what's going to happen for the year. And so really January, December definitely is a no trade. January, I would trade very lightly because it's just not a lot of volume in the market. Now, February is when volume returns back to the market. Okay. And so I'm not saying, January, I'm not saying not to trade. It's just you need to know what you're going into. And that only comes from seeing the cycles happen a couple of times. Okay. The summertime in which we've been in, it's not a particularly easy time to trade. Those of you that are cutting your teeth and learning how to trade now, you're learning to trade during one of the most difficult times to trade. It's because people are on vacation. You know, we are on the other side of computers and we see lights and digits going, but it's people. There are people on the other side of all these computers, and if they're on vacation, guess what? There's not a lot of trading being done. Okay. Also, we are coming to the end of the fiscal year come September 30. Okay. The new fiscal year starts over October 1. And so a lot of banks and institutions, they have made the majority of their money. And so they're going to be very conservative because their bonuses are attached to them hitting certain levels and goals of revenue. Okay. And if you're $30,000 away from your goal, you're not going to trade as heavy and put as much into the market as you would if you were 800,000 away. Okay. And so they start trading more lightly, and that's the reason we're seeing these impulses with these pushes, and then it'll just stay still for a while, and it'll pull back, stay still, and it'll consolidate for a while, and then it'll push. It's because it's not a lot of volume in the market. Okay. And where there's no volume, I don't care how great a setup you see, if there's not enough volume there to move, it's not going anywhere. It's just going to frustrate you. Okay. So the next thing is currency balance. Okay. Does anybody know what I mean when I say currency balance? Anyone? Okay. Let me see some answers. No. Okay, that's cool. Currency balance is this. In order for price to move, you have to understand what when we're talking about forex, not necessarily talking about an indice, because the indice is a group of stocks that the price is based on the evaluation of the whole. But I am talking about a currency pair. Let's take GBP versus US dollar. It's a competition between both countries. Okay. And if both of them, it's like a tug of war. And if you have people on both sides of equal strength, let's say there's a flag in the middle, you know how to do tug of war. It's not going anywhere. It's just going to do this. If I can pull at 1,000 pounds per inch, and you can pull at 1,000 pounds per inch, only thing we're going to do is do this. No one's ever going to win unless there's imbalance. Do y'all follow me? That makes sense? And so in order for a currency pair to move, there has to be imbalance. One has to be stronger than the other. One has to be appreciably weaker than the other. Okay. So if there is balance between the pair in strength, guess what it's going to do? Somebody type in the chat when there is balance between the pairs. Stagnant. Yes. We have a word, we have a term for it. It's a term for it in trading. Boom. Ranging, consolidation, or what Uncle P says, SpongeBob SquareHead. Okay. That is nothing more than a tug of war where both parties' strength are near being equal. I pull a little bit, you pull a little bit. Okay. That's the reason we don't like ranging markets. We want imbalanced market. And I know most of the time in life, we want things balanced, right? You know, like the scales of justice. We want things balanced, but in the forex market, we want imbalance, because when we have imbalance, then we have movement in the market. Okay. So it may just be that the pair, let's say, Euro CHF, they could have equal things going on. Or let's say, I got one better, Australian dollar versus the New Zealand dollar. Their economies are very linked together. Okay. If something happens in that area of the world that will affect both of them, guess what? There's going to be almost perfect balance, and it's not going to go anywhere. Okay. There has to be something detrimental happening to one while the other one is okay for the market to move. That's the reason when news events, going back to the other item, that's the reason when news events happen, when it's favorable to the US dollar, everything that's opposite, every pair that's opposite the dollar, let's say Euro USD. If it's favorable for the dollar, that means the strength of the dollar goes up, which means that Euro USD goes down. Okay. Because the first country in the pair is what we call the lead pair. Okay. And so it's the lead pair competing against the secondary pair. And if something favorable happens to the US dollar, that means the euro is weaker and therefore it goes down. Okay. But let's say something bad happens regarding the US economy. That means Euro USD would go up. GBP USD would go up. Gold would go up. Okay. But on the other end, USD JPY would go down. Okay. USD Swiss would go down. Okay. So we need imbalance for the market to move. Okay. So I want to show you guys something. I'm going to take away this screen right quick. And I want to go to another screen and show you not necessarily this is not the tool that I use. I have a mobile app that I purchased, but there are some free resources out here that you can use. Okay. I'm going to share this with you. What I want you, I want to give you all some tools and some little hacks that you can use to kind of help your trading, to give some context. Okay. Okay. This is kind of subsidiary site of Baby Pips called marketmilk.babypips.currency strength. Okay. I'm gonna copy this and put this in the chat. Give me 1 second, y'all. All right. If y'all want to pull that up, this is what we call a currency strength meter. Okay. This is a currency strength meter, and it is live data, as y'all can see, as of August 23rd, 8:25 p.m. Okay. These are the strengths of the current currency. You see that they're changing in ranking. Okay. This is strongest to the weakest. So as we see right here, the US dollar is the strongest right now. Okay. Japanese New Zealand dollar. Now this is per this time frame, okay? Per this time frame, okay? So let's look at something. USD, let's see, JP, ooh, it's switching around. USD Swiss, y'all see that? USD, no, let's look, USD NZD, okay? So I'm gonna pull up, this is my trading view account. I recommend everybody get one. So let's look at NZD USD. Okay, let's get on 30-minute. Okay, let's zoom in. I'm sorry, guys. It looks like NZD USD is about to start going down based on this price action. Okay, but what this told us was on the 30-minute time frame, US dollar is the strongest, New Zealand dollar is the weakest. Okay, now all these markets are about to open up at 8:30, so it's really kind of get real feisty here. So based upon this, we should see this start to go down. Why? Because the US dollar is going to be stronger than the New Zealand dollar. Therefore, we're going to see some contraction of price. Okay. Let's do another time frame. Let's do daily. Okay. Now, this is a, if you notice, you can choose different time frames and you will see different things because it's the same price, is looking at it at a different perspective. Now we see that the US dollar is the strongest. Okay. US dollar is the strongest on the daily time frame, but the Australian dollar is the weakest. Okay. So let's go to AUD USD. Gotta find it somewhere. Okay, here's AUD USD. Let's go to the daily time frame. And look at this, guys. Do y'all see that this is consistent? This is consistent on the daily time frame with the Australian dollar being weaker than the US dollar. Why? Because we see this downtrend. Y'all see that? We see a clear downtrend. Y'all see that? Yeah, if y'all see that clearly, so y'all put a 6 in the chat for me. Okay. So I use an app. I use an app I'm going to show y'all that I purchased it. It doesn't cost a whole lot. It's called a currency heat wave. Okay. I'm just telling you what I use. I don't get any kickbacks from it or anything like that, but I use a currency heat wave, and what it will show the overall, it will show the overall um, ranking by number of a particular currency pair. Okay. So right now it's saying that the US dollar globally, and this is like a average of all the time frames, that the US dollar is ranked at 1.43. Okay. Averaging all of them together, the strongest currency right now is the Canadian dollar. Okay. That makes sense. Why? Let's look at this. Now this is, and I was just talking about overall, but let me share this with you guys. If anybody know, like I know, that, let's go just to the hour. And we're gonna go to USD CAD and look at the imbalance. Do y'all see the imbalance? US dollar is weak based on what this meter just told us. Okay. US dollar is weak. Canadian dollar is the strongest. So therefore, that is the reason this is going down, because we have imbalance. Okay. Does that make sense? Anybody that does not make sense to? Okay. Now, let me also share with you two of them that are pretty equal. Okay. This thing is telling me right now that GBP, Great British Pound, and the Swiss franc both are ranked at 5. Okay. So I'm going to share this again. We're doing this real time, guys. So we're going to pull up GBP Swiss. I don't know if I even have it on here because I don't normally trade GBP Swiss, but I'm going to put it in. Give me 1 second. What do we see right here, y'all? Somebody type what you see. Somebody type something. We see ranging. Exactly. We see consolidation. We see SpongeBob SquareHead. We see all of that. Okay. So again, GBP was ranked a 5. Swiss franc was ranked a 5. They are in equal balance and strength. Therefore, they are in consolidation. Okay. And so using these tools, whether it's this currency strength meter on the website here, or whether it's using an app like I use, currency heat wave, it helps to give you context as to why something is moving or why something is not moving. Okay. So that's just a tip that we can use. And it gives us some context. Now, there are some people that trade strictly off that imbalance. I don't know if I do that. It's a couple things. I use it as a last confirmation. Okay. So the last thing I want to go over with you guys is ADR. Can somebody explain to me what ADR is? Does anybody know what ADR stands for? ADR. Alpha Delta Randy. ATR. ADR. Average daily range, average daily range. Bing, ding, 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 ding. Y'all got it. All right. Average daily range. Okay. Here is one of the main reasons, guys, that you may be frustrated and it may not, and it's not your fault. Okay. You saw what you saw. Your analysis was right, but ADR may be your issue. Okay. So let me pull this up. I'm going to pull up our chart. So we're looking at something that we're used to. Okay. One second. All righty. Okay. So this right here is ADR. ADR stands for average daily range. Every pair, and y'all write these notes down, please. Every pair has a different ADR. Okay. This is the range that a currency pair moves per day. Okay. So this right here, and I'm going to put this I'm going to put this indicator in the group that you all can use. It's called bar alert. Bar alert. I'm going to drop it in when we're done. But bar alert gives a lot of information, but one of the most particular great information it gives, the countdown time until till that particular candle closes. It gives the current spread, and it also gives the average ADR over the last week, over the last 4 weeks, which is a month, and over the last quarter. Okay. So right here, it's already measured it for you. You don't have to calculate it. It's saying right here, and I wish I could expand it and make it a little bigger, guys, but I can't. Over the last week, the average number of pips that US Swiss has moved per day is 54 pips. Okay. The average that is moved over the last 4 weeks, which means the last month, is 49 pips. Over the last 3 months, it's only moved 53. Okay. So what you could do, you could take an average of the averages. Okay. I'm not the greatest at math, so let me do it right here on my calculator. 54 plus 49 plus 53. We're going to divide that by 3. Hold on. That didn't work out. 54 plus 49 plus 53 equals 156 divided by 3, 52. So if you add all those together and get the average, you get 52. Okay. So what it is telling us is, based off historical data, this pair only moves 52 pips a day. Okay. So let's pretend, we said, man, USD Swiss was really moving good today. I'm going to jump in right here and I'm going to ride this thing all the way down, and I'm getting out today. I'm getting my money real quick. Well, let's measure this. Okay. Let's put up our daily, okay. Let's put out our daily dividers. Okay. Let's start right here. And it moved in this direction. Let's just measure it down to this point right here. That's 23 pips. That's 30. That's 34 pips. That's down here. Basically, before the day ended, it moved 40 pips. Okay. So what if you got in right here? Let's say you want to get in right here, and you're expecting this thing just to go through the floor and just keep moving. How much can you reasonably expect it to move if from the beginning of the day it's moved about 36 pips already, when the average daily range of this pair is only 52 pips? Okay. So a lot of times, particularly when we're trading New York market, when we're trading London, or we're trading at the end of London, after London closes like 12 p.m. Eastern Standard Time, we wonder why things to just start going sideways after London closes? It's because it's likely that your ADR has been reached. Okay. Now, there's something else on here I want to show you guys. I'm going to go to another pair. All right. I'm going to go to another pair here that moves a little faster. Okay. I'm going to go to GA. All right. Now, let's look here. As we can see here, the ADR for Great British Pound Australian dollar is 119 pips per day over the last week, 97 pips over the last month, and 104 over the last 12 weeks. Okay. So this is simply all you have to do, guys. And I know this seems a little cumbersome, but this will save you from being in bad trades. 119 plus 97 plus 104. Okay, that's 320 divided by 3. Now we're looking at 106 pips per day. Okay, one, that means it's a fast moving pair. So you need to know that as it pertains to your trading plan. Part of your trading plan can be, I don't want to trade any pair that's under 80 pips per day ADR. That's too slow for me. Okay, there are pairs that move very slow, but they pay well. Then there are those that move fast, but don't pay as well. Okay, so you want to make sure. Good question. Yes. Well, will news events change ADR? It can, but again, it's an average. So one outlier won't really shift the whole thing, because what it does, it calculates all the pips that were the pip movement for the day. And so you're going to have some days that are peaky, like NFP. It's probably going to move the average up because that's a heavy news, heavy volume day. But then there's going to be some days where it does like this. I saw a day. It can be a day like this day right here, where it simply kind of just consolidated. It moved down a little bit, but really didn't go anywhere. So there are going to be days where it only moves maybe 50 pips, and that's going to balance out the day that it moved 120. Okay. And so this right here, this is another app that I'm going to put in. And so I've seen it on some of y'all screens when we've done some one-on-ones. This is called ADR. It's very simple. What it does at the beginning of every, let me get rid of simplicity just so you can see it. All right. At the beginning of every day, you see right here where it says ADR start. It's already done a calculation based on this. And it is already projected from the start. Okay. And it says right here, the average was, what did we say the average was? Average was 106. Okay. So from the ADR start, this is the start of the day. We can measure up here. And guess what, guys? We're about it's right here at about 102 pips from the ADR start right here. And this is about 60 pips from the ADR low. Okay. So based on the mathematic calculation, this indicator is telling you, based on the average daily range of this pair, this is likely going to be the ADR high that's going to be reached, and this is the ADR low that's going to be reached. Okay. So if a pair is in a bullish posture, this is a great area to put a take profit, because almost always, and you'll see it when you start putting it up. Right now we're at the beginning of the day, but if you could have seen it at the end of the market yesterday, most of the time price hits the ADR high and it will pivot and turn around and go hit the ADR low for the day. Or when it hits the ADR high, it will simply just consolidate for the rest of the day. What it's saying is, hey, we've given out all the pips we're going to give for the day, and we're not doing anything else. So what it will do is just consolidate until the end of the session. You see how this consolidation started here? The reason it's consolidated right here likely is that it reached the ADR low, and it wasn't going to move anymore. And now we're in a new session, and now we see the movement in the market. Okay. These are just little tricks that will give explanation. So if you see a good pair that looks like it's going to move, it doesn't mean it's not ever going to move. Is that the pair that you own may have reached its limit as to its average. And what you will likely have to do is to hold that trade over into the next trading day. Okay. And when you get to the next trading day, then it gets a whole new ADR, and then it starts moving again. Has anybody ever seen that? Put a 3 in the chat if you've ever seen where it seems like it just stood still and then the next trading day started and then it started moving. I will tell you 9 times out of 10 that pair likely reached its ADR average. Okay. It likely reached its ADR average. And so as a result, the market is saying it's not giving up any more pips, guys. Okay. All right. Now I want to show you something else. And this is going to blow your mind. This is why people trade some of these instruments. Okay. We saw how slow Euro USD was and all that stuff. Let's look at gold. Look at the pips. It moves on average 1,796 pips per day within the last week. Over the last month, it's moved 2,161 pips per day. Over the last 12 weeks, it moves 2,256 per day. This is the reason people like to trade gold, and you don't have to use large lot sizes, is because it's very volatile. It moves very quickly. I mean, you can put a 5 cent that only pays 50 cents a pip, but 50 cents a pip that moves 1,700 pips. You're talking about money, right? So that's another one is US 30. Let's look at US 30. US 30 moves 41,534 pips per day over the last week. It's been very volatile. That's not a typo, guys. 41,000 pips per day. You see why people want to trade that? It's because it will pay your house off if you trade it the right way. Okay. But it will also take all of your money and not even look to see where you landed. Okay. So we have to be careful with that. But that's just a little bit regarding ADR as to one of the reasons your trade may not be moving. Okay. And so we want y'all to use the currency strength meter. If you want to get the currency heat wave, that's cool. But those are the tools I want you to put in your arsenal so that you have the right expectation when you get in a trade. I know by 1:30 whether something has any more gas in it. Okay. And unlikely, as I say, if it's a JPY pair, it's going to move tonight when the market gets moving, because it gets a fresh ADR and the pips start moving. Okay. All right. So last thing I want to share with you guys, and then I want to share the little treat we have, is I'm start doing like a little weekly hack, a little tip that we can do. Okay. So some people have been asking, we've got a lot of people on here that work during hours. They really want to trade during New York. They really want to trade maybe during London, or maybe they work third shift, and or maybe they're getting a rest and they just can't wake up. I understand that. So let's talk about doing pending orders. Okay. I want to run through it one more time. I know we did it in a small version, but I want to just show you right here in my demo. Okay, you saw that just repaint the 4 hour. We anticipate price breaking this level, so we're going to put a sell stop there. Put it safely under this level so that it picks it up. Okay. Now, what I'm also going to do, I double click it so I can type in a stop loss level. So I'm going to type 128.9, 128.8, 935. Okay. I'm going to type that in 128,935. I'm also going to type in ADR low here of 128,303. Okay, you press modify and boom, we've got a fully bracketed order. Okay, that makes sense? Got a fully bracketed order here. So we got a stop loss, we got an entry, we got a take profit. But what we need to do is we need to right click here, hit trailing stop, go to custom. And if we want to do a 15 pip trailing stop, we need to do 150 points. Okay. MT4 measures by putting an extra zero on everything because it measures in points, not pips. So we need to do 150 points. And so now we have a fully automated and bracketed order. Okay. If it doesn't get us in, that's great. If it goes the other way, that's cool. We wouldn't have wanted to be in that trade. But if it comes down and gets us, it'll keep going down. And when it gets beyond 15 pips profit, it'll bring this to break even and it'll start coming down and escort this to the ADR low. Okay. Y'all saw that this time, right? Y'all see it? Was that cool? Boom, 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 boom. Okay, awesome, awesome. Okay, so guys, here's our homework. Let me share this with you. I've been hearing some great things from people talking about you're getting very proficient in getting your pips. That's great. That's what we want to hear. I want you to learn to catch pips first. So when you catch pips, adding more money to it is no problem. Okay. But I feel we're at the juncture right now where I want y'all to start adding more volume to your trading. Not volume in the number of times you trade, but the volume in money that you're trading. Okay. And by that, I mean this. You all are in demo. Okay. My purpose is to get everybody to be a funded trader where you're not trading your money, you're trading the prop firm's money. Okay. So what I want us to do on this week, I want us to start trading in demo, risking the same 1%, but do it as if we have $5,000. Okay. Which means we're only going to be risking $50 per trade. Okay. That's 1%. $50 per trade. Now, if some of y'all were doing as if maybe you had $500, that means you were only risking like $5 per trade. Okay. And the reason we're doing that is this, guys. Okay, good question. If you turn your computer off, does the trailing stop still work? No. Trailing stop, your computer has to be on for an automated feature to work. The workaround for that is you need to have one or two things: a dedicated computer that is always on. Okay, that's hooked up to the internet. It's always on. Or you can get what they call a VPS. Okay, VPS stands for Virtual Private Server. There are VPS companies that specialize just for Forex companies. I think the one that I use is Cheap VPS Forex. I'll give y'all the link to the one I use. Again, I don't get any kickback from that. You can rent space on a server for maybe like $60 a year, $90 a year, maybe something like that. It depends on what size computer you want. The higher the capacity, the faster the specs on the computer, the more it costs. Okay. I use it. I have my Simplicity scanner on it, so it will give me notifications all the time. I operate some trade managers and things on it as well. Okay. One thing is I've got a very expensive MacBook Pro that I use, and I don't want to wear my computer out just having it on all the time just to give me signals. Okay. So it's worth it to me to pay $60 to $80 a year for somebody else to wear their stuff out instead of me. Okay. And you simply log in via remote desktop. I have a Apple computer, And anybody knows that MT4 does not work well on Mac computers. But what I can do is I can control what everything you all been seeing on my screen. It's me controlling a PC that's somewhere in the country somewhere. It's a server somewhere in the US. Okay. So that's an option that you can use. I do recommend that you do that so that you can do things like that, Justin, have automated features, because it only works if you have your computer on. So great question. All right. But back to our homework for this week, guys. I want you to start upping your percentage that you're trading. Not up your percentage, but up what your percentage is based on. Okay. So I don't want us to go all the way to 25,000. Let's base our trading on having $5,000 in an account. I don't care if you got $100,000 in your account. Base it. Act as if you got 5,000. And now let's start trading using risking 1% of our balance. Okay. And y'all know how we do the 1% risk rule, right? We risking 1% every time we go to the market, but our lot size is determined by the size of our stop loss. Okay. But we're going to go to Nash markets or whatever calculator you use. You put 1%. You say, oh, my starting balance is 5,000. I'm risking 1%. This is the currency pair I want to trade. This is the direction I'm trading in. And then this is how big the stop loss is. And it will compute and give you a lot size. Okay. Here's the reason we're doing that, guys. What I don't want you to do is say, man, I'm getting 50 pips now. Great. I'm ready to do this challenge. I'm ready to do the challenge. Well, the challenge is for, let's say, funding talent. The minimal amount that you trade with, you're trading for a $25,000 account. So they want to know how you trade a $25,000 account. Okay. 1% risk of a $25,000 account is $250. Okay. If you have only been trading with a $5 risk every time, and then you jump up to $250 in risk, that's going to freak you out. You haven't seen those kind of numbers before. Because when you can risk $250, and if you get a tight stop loss, you could have a $3 lot. Okay. If you have a $3 lot with GU, that means every pip it's moving $30. Okay. In the negative or in the positive. And I don't want you guys to freak out when you get into the big leagues and you start trading with larger sums of money. Okay. Keep in mind, guys, it's the same 1%. It's the same 1% when you were putting 2-cent lots, 3-cent lots, 8-cent lots. Okay. It's just now it may be a $2.50 lot. It may be $25 a pip, but don't let it freak you out because it's the same 1% from the 25,000 to the $250. Okay. It's the same thing. So I want you all to do that. The next step we're going to do, I want us to ultimately sign up for a demo account with like FTMO. FTMO has a great demo system that gives you a lot of analytics that tells you how often you're trading, what's your average risk to reward ratio. It tells you what your win percentage is. It gives you breakdowns of your trades. Okay. So that's the next step where we want to go. It gives very valuable information. But right now, I want to get our legs under us, because what I don't want is for us to be trading these little itty bitty amounts. And then when we get up to trading for a $25,000 account, we're scared to go 1%. It's the same 1%, y'all. It's just 1% of a larger pool. Okay. Any questions about that? So this week, I want you to trade as if you have a $5,000 account. Okay. Cool. All right. So now for the good stuff. I want to show you guys something that I've been working on. It's not available, but I want to show you guys why I've kind of been a little dormant. I've been working on something. Because I know that I'm going to show you that this is a lot. Okay. And let me pull up the old. Okay. I know this algorithm works, and I appreciate you all for the great feedback and you know saying that it's helping you a lot and it's changing everything. But can we be honest? This is a lot. Okay. And I was thinking that the other day. I was like, you know, we're used to all these colors and all these lines and all that stuff because we're in the simplicity world and we know what the trend surfer is and blah blah blah. But somebody that comes off the street, man, this looks like Greek, you know, just it's a lot. And so what I've been working on, really my own system, but in particular, I was working on a tool that could combine a lot of this so that we could get rid of a lot of these things where this has to line up with this and XYZ and blah, blah, blah. And the more things, I'm trying to reduce those 7 areas of agreement down to like 2 or 3. Would y'all appreciate that? If y'all appreciate that, put a 9 in the chat. I mean, it is what it is. We do what we have to do for now. But that's my endeavor for us to simplify and just to have just a couple of things that we look for. Okay. So I want to share with you guys something I've been working. It's in beta right now. It's not available right now, but I want to show you guys just so y'all can be on the lookout for it, and really can get excited about it because it's something that I'm really excited about. Okay. This right here is an indicator that I've been working on with a developer. Okay. And what it does, it has all the things that we were looking for over here. It combines everything that we were looking all this to line up with this and this to line up with that. And you know, if the humidity has got to be right outside and all that stuff. Okay. All these particulars, and it has combined it into one single solitary trend line. Okay. Now, let me show you why I was so excited about USD CAD. Okay. I got into this trade, guys. When this thing turned red, I knew that everything lined up. Okay. I knew that everything lined up, and I kept the oscillator for now. And when I knew that everything lined up, I had no hesitation. I got into the trade. I put my stop loss above the trend line. I still have it there. I have not moved it from when anybody watch my videos from day on YouTube. You can tell. This was a 30 pip. I'm just gonna round up, say 30. A 30 pip stop loss, guys. Y'all see right here how far this is run. It's a 30 pip stop loss. I still go by the same rules. I make sure there's rejection of 4-hour and daily. And I don't care about any of this. I just wait for this to turn red. When this turns red, I get in, I make pips. It's that simple. It's that simple. It works on, and all these trades that I'm green on, all of them have the same thing in common. Look at this. Just beautiful. Rejection, rejection, turns green, goes. All right. You name it. Same thing right here, guys. Y'all see I got in right here? Y'all see I got right here when it turned red, right? When it broke, I still got my stop up here. Look how far it's run. Okay. And it's going to respect this line. May push it up a little bit and we'll continue down. And you can see from previous runs here. Look how beautiful this is. See what simplicity came in. I'm trying to zoom out because it's so came in right here. Simplicity along with the oscillate when it turned green. You could have got in right here, put your stop loss right under it. And look at that. Look at that run, guys. We got in right here. 491 pips. Is that crazy? Is that crazy? Or is that crazy? The way you say, yeah, boy. So does that seem like something y'all would use? Does that seem like something that would be of benefit to you guys? So, like I said, when y'all join the group, I'm going to make things available to you guys. Okay. There are some people that I'm using the beta test and we're getting the kinks out of it. Right. Too many colors. Right. So we simplified it. So you are no longer have to match up all that stuff. Okay. When you'll know when it turns green, you can get in. And what it's doing for me, guys, and I'm gonna have to credit my brother for this. He really opened my eyes to it, and this is what I'm trying to get myself to build my stamina up. When you see this and you get this thing gives you to give the context to stay in the trade. Okay. We're trading the 4 rejection, but guys, I'm telling you from now on, I may update our rules. I'm not taking trades any longer unless it's backed up by the 4 and the daily. Okay. Because when you do, you get this. If you just staying from white arrow to white arrow, guys, we're talking about 1 to 2 trades a week. Okay. I'm not making this up. Y'all see the same charts I see, right? Look at the last time that this came in on UCAD. Okay. Now, will it take weeks sometime? It may. I'm okay with that. Okay. You can eat and nibble off of it all you want to. But I am about I'm at the juncture now in life and in my trading career where I'm trying to take less trades that are more profitable. Okay. So this one right here, this is EA, right? We see daily and 4-hour structure come in. Let me zoom in just a little bit. We see daily and 4-hour structure come in. All right. Look at this. When it turns green, what do? We get in right here. It would have been on this candle here. I'm going to put it safely under, let's say 20 pips, 20 pips under. Okay. Well, all of a sudden, this right here is 50 pips. So I've already made 2 to 1. Right. But imagine if you held. So I got a couple questions. Yes. To answer your question, it does have alerts. In addition to that, I'm working with my developer to create a scanner. Okay. I'm working with my developer to have a scanner. Okay. So then you can put what pairs. So we can do our analysis like we do every night, right? We at 5:30, 6 o'clock, we look at the ones that are potential setups. We put them in our scanner. When the scanner tells us, hey, bullish on the 15-minute, blah, 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 you can look and confirm. Okay. You can look and confirm and you can take your trade accordingly. Okay. So I am working on a scanner. It does give alerts. And exit rule. Exit rule is this, Swain, and very good question. And I'm going to go back to the chart in an instant like this. The reason I love these simplicity support and resistance lines is that these are areas where price has been before. So you can look to the left and you can create your own take profit levels. Okay. That can be a take profit level there. That can be a take profit level there. This can be a take profit level here where it's been before. That should take TP 1, 2, and 3 if you like. If you want to take it up further, you can. Okay. So exiting, but in the true essence of it, you can ride it from white arrow to white arrow. Okay. So right now, this trade had a great push down, but down we know the 4 hours going against the daily. We know this is a pullback. Okay. The trend has not changed because look at the oscillator here. Look at this. This gives us confidence to know don't freak out. It's just pulling back. Okay. But when then we should get another arrow saying let's go back down. Okay. Guess what we can do? We can get additional lot size if we want. And now when it does that, then it should develop one of these again. And now we can get another tight entry to ride it down even more. Okay. What I'm trying to do, which I'm trying to get us in a mode that we're trading less. We're paying more attention to a couple of pairs that we're trading. And then we are stacking, we're snowballing as it is moving to its destination. Okay. Any other questions? Somebody said something about release date. Right. Swain, very good question. Right. I would not get into Euro AUD now because it's in a pullback. But when it reaches, it shouldn't pull back much longer. It should turn back around and start heading back down. You can do one or two things. You can get when it confirms that it's rejecting, you can get in, or you can wait until it breaks that previous support structure and closes beyond it. Then you can get back in on the sell. But trust and believe, guys, until you see a white arrow, it's heading down. Okay. We have to learn to let price breathe. Okay. I don't know about you all. If I start running, you know, I'm 43. I'm 43, right? If I start running, I can't run as far as I used to at a sprint. I got to stop and take a breather. Okay. No, release day is not release is not today, y'all. It is not. First of all, I haven't gotten the kinks out of it. I've got a couple of people who are beta testing it. But on top of that, I'm gonna put somebody say I'll take kinks. Y'all funny. And two, I'm gonna put a licensing software on it.